Welcome to this week's edition of Trade the Trend, a weekly video about where the stock market is going. This video is going to focus on the SP 500. I'm going to cover the ASX 200 as well as copper, gold, oil and uranium in a separate video. I'll leave a link for that in the description section below. I'm also going to tell you about some interesting developments in the small caps, so make sure you stick around for that. As always, this is general commentary, doesn't take your personal situation into account. All that said, let's get into our first chart. So we're going to start with the S&P 500, and it's been a pretty constructive sort of week. The S&P hasn't really moved very far over the last few days. In fact, the last week has been one of the tightest ranges we've seen in quite a few months. I think that the key positive to take from this is that the market's holding on to almost all of its gains from this big rally we've had from the October low. And to me, this is suggesting that the underlying interest is to buy the market, not sell into the rally. So it really is a very different situation to what we were seeing during 2022, where we get these strong rallies, but then the interest would come in to sell. It'd be sell into the rallies. That was quickly coming through and pushing the markets lower again. So that's not what we're seeing at the moment. We're able to hold up at these what are quite elevated levels from where we were seeing prices just a few weeks ago. I thought we may have seen a bit more of a dip back down towards the moving averages. Also, give the moving averages a bit of time to come and catch up to the current price action. But the S&P 500, it's just continued to hold strong. We haven't had that what's often a typical sort of pullback to a strong move. It's been steady and strong price action, which has been holding firm. When you step back a bit and you just compress this price action, what we see this classic rounding shape, this rounding structure where you get a series of lower lows and lower highs, and then as it rounds upwards, we get the series of rising highs and rising lows. And that's look, it's one of those patterns that you like to look for in a market which has got a structurally sound footing. We're now seeing prices holding above the moving averages. So we've got the 50 and the 100-day moving averages. The danger area was back in September, October, when prices were sitting below those averages. That's when the bad stuff tends to happen when prices are below the averages. That's a point of vulnerability. That's now flipped. We're now above those moving averages, and the moving averages are rising. As I said a couple of weeks ago, if we're looking at this, and this was say this was an individual stock, and this is a structure that we were looking at, it's a sort of stock that I'd want to own. I think, and I think the play here is that this is a market that we want to be buying into. We want to be buying into the strength of this market, not trying to pick some sort of turning point to the downside. Market breadth is still lagging. I think it still remains a cause for caution. I like to be able to put all the pieces together. It's nice when everything snaps into place and you can go, okay, that makes sense. At the moment, we've got that momentum. The structure looks positive when we look at an index like the S&P 500 in isolation. But there's still that concern around the breadth not being quite as robust as I'd like to see it. But with that overall momentum to the upside, for me, it's a case of buying stocks that are breaking out, which are above their moving averages, and then using risk management strategies to manage those positions in the event that things take a turn for the worse. But at the moment, it's that momentum's to the top side. Interesting to have a look at the Dow Jones. We often don't look at this. Most of the focus goes to the S&P 500 and Nasdaq. Dow's a very interesting one to have a look at. It's already comfortably above this August high point, and it's rapidly closing in on the all-time high from January 2022. We've got positive moving averages. We can see the 50 days now above the 100. Price is trending nicely above those averages. Path of least resistance here is very much very much to the top side, very much to the upside when you look at how the price actions playing out. I think there's still a lot of disbelief in the rally. There's a lot of disbelief that markets should be closing in on all-time highs, given there's still talk of interest rates about recessions. There's still a lot of uncertainty in the economy, and there are also always plenty of commentators who are keen to point out where there's weak points in the economy, and that may be true, but I'm not going to stand in the way of a rising trend and argue that the market's wrong. It's a case for me. It's about going with that momentum, and if that momentum changes, well, then we use risk management to back out and reverse out of those positions. I've still got cash on the sidelines, but that said, I'm also continuing to get that money back into the market with this momentum as it continues upwards. Now, if you're getting value from this, please hit that like button. Please leave us your comment. Just tells YouTube you're watching, you're engaging. YouTube shows other people, so please do that. It helps lots when you do that. Now, let's wrap up with a quick look at the Nasdaq and the small caps. And the Nasdaq, well, it's a similar story to the SP 500. It's been a week of tight range trading. Seems like we're getting this market's being well supported on any weakness. The brief is a pullback. It seems to be supported. As I was saying with the S&P 500, very different personality to what we were seeing about a year ago. The pause is giving these moving averages a bit of a chance to catch up, and I think the odds favour that we will see higher levels in the Nasdaq. And just quickly wrapping up with the small caps, these remain out of sync. This is one of those pieces of the puzzle which isn't falling into place. It's very much out of step with what we're seeing in the large caps. But we do have some interesting levels to watch. The Russell is trading just beneath this resistance point at around 1,810. You can see it's been a technically relevant area for quite a few months now, just pressuring underneath there. Now we've got these moving averages. It's just stuck at its head above the averages. The averages are starting to turn to the upside. It's still, I think it's still early days. There's still more work to do, but these are encouraging signs. We've been able to come off the lower end of the range, now be testing resistance and be above moving averages. The next step, of course, is to get a break above 1,810 and start then potentially looking for a move back towards the top of the range. That's yet to happen, but as I say, I'm playing this from the long side, keeping a bit of extra cash, but starting to deploy that as we get more breakouts, as we get more momentum coming into the market. Okay, well, look, I think we will leave it there for this week. Thank you for joining me. Great having you with me as always, and I look forward to coming back and talking to you next week. Till then, bye for now.